Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Monday, 26th of November 2012. Eurogroup meeting regarding Greece is the top event of today, and the hopes for finding deal are quite high, and they're keeping basically supported the single currency that is just trading off last Friday's high close to 130.00, and a positive sentiment driven by hopes of finding a solution for Greece at this point are quite high, as commodities are also well supported. Basically, the focus is on today's Eurogroup meeting, and finance ministers and the International Monetary Fund will seek to unfreeze the second bailout package for Greece on their today's meeting. But they first need to agree if some of the official loans to Athens might eventually be forgiven to cut Greek debt. The Eurozone ministers and their deputies have held a number of meetings and conference calls over the past 2 weeks to decide how Greek debt, seen at almost 190% of GDP, and next year could be cut to a more sustainable 120% in the coming 8 to 10 years. And without agreement on how to reduce the debt, Eurozone ministers and IMF basically do not want to resume payments of loan tranches to Athens, even though Greece has met all the conditions and requirements, because they have no guarantee on whether the need for emergency financing will ever end. Basically, this is one of the main problems with Greece, and prolonging the deal for the latest tranche, failure of which, to be honest, is going to be quite difficult for Greece, as beginning of December the country will run out of money, and without this agreement, basically the officials of Eurozone and IMF are not willing to proceed. The key question now is, can Greek debt become sustainable without the Eurozone writing off some of the loans to Athens or not? So far, the options for debt reduction under consideration include reducing interest on already extended bilateral loans to Greece from the current 150 basis points above financing costs. How much lower is not yet decided. France and Italy would like to reduce the rate to 30 basis points, while Germany and some other countries insist on the 90 basis points margin. Another option which could cut debt, Greek debt by almost 17% of GDP is to defer interest payments on loans to Greece from the IFSF, a temporary bailout fund by 10 years. The European Central Bank could forego profits on its Greek bond portfolio bought at a deep discount, cutting the debt pile by a further approximately 4.6% by 2020. A document prepared for the ministers' talks last week that was showed. And not all Eurozone central banks are prepared also to forego their profits. However, the German Bundesbank among them. Greece could also buy back its privately held bonds on the market at a deep discount, with gains from the operation depending on the scope and the price. But the preparatory document from last week said that the 120% target could not be reached in 2020, only 2 years later, unless the ministers accept losses on their loans to Athens, provide the additional financing, or force private creditors into selling Greek debt at a discount. The latest analysis for the ministers showed the debt could come down to 125% of GDP in 2020. One Eurozone official announced this on the last Friday. As said, there is still positive sentiment and hopes that things could change for Greece, especially in light of comments of Angela Merkel last Friday that technically it's possible and that they are not far from the deal. Keep the positive sentiment in the markets, as single currency rallied to 129.89, just few ticks off our initial target and psychological barrier at 130.00. Sterling also surged above 160, closing well above this level and hitting a fresh high at 160.49. Dollar remains under increased pressure against the Japanese yen, with 82 zone now being again under pressure. A second attempt lower could likely result in the further extension, further corrective action of the latest strong rally of dollar yen, while dollar Swiss now stabilizes below 93. Initial and psychological support that was cleared on last Friday, fresh fall, and the weekly close below 93 sees more negative tone in the coming sessions, with the most likely scenario full retracement of 92.13 to 95.11 rally. Also, euro surged against Japanese yen to its 7-month high at 107.12. This was the high of last Friday, with the corrective action, technical corrective action now underway. 106 still staying intact. Initial support at 106.56 has been briefly dented. The crude oil is picking up again the speed, though on the larger picture is still on the in the range, but currently standing at levels closer to the upper boundary of the recent range, with the clearance of 88 that we mentioned in our previous sessions required to shift near-term focus higher and avert immediate risk of retesting 84 support. However, still barriers standing at 89.20 and 89.77 still seen as a good obstacle for the oil price, and in case of failure to clear these levels, we might see the further range trading. From the other side, gold is one of the top performers last Friday on the surge from levels approximately 1732, where the pair was where the price was stuck for a couple of sessions, and failing to clear initial barrier 1735, which marks the 50% retracement and the previous high, with several sessions closing below this level, kept basically the outlook still under big question mark. However, last Friday's rally from these levels and surge through initial barrier at 1738, which marks the previous high, and the Fibonacci expansion of 50%, as well as regain of our initial targets at 1746 and 48, extending to 1752, keeps the upside now firmly in focus. The outlook for most of instruments remains as from last Friday. So basically, dollar negative and the counterparts in the positive mode. From today's calendar, no significant, not many events due to be released. Unemployment level from Switzerland has already been released. We don't have yet the update in our calendar. Approximately it's 4.122 million in the third quarter non-farm payrolls for third quarter of Switzerland, and then we have the German consumer climate at 12 o'clock GMT. No changes according to the forecast. 6.3 in November's release, and basically except the Eurogroup meeting that is the key event today, nothing else to be expected. So we're gonna take a look in the technicals and see the levels and the directions we should expect during today's trading. Starting with euro, brief technical corrective action seen overnight following last Friday's surge to 129.89. This was the high, and closing well above 129.00 and also 129.55. That marks a 61.8% retracement of the down leg from 131.38 to 126.60. Sees the upside is still favored. However, current hesitation is seen currently, despite bounce of overnight low at 129.42, as the hourly studies are still weak. MACD is still pointing lower, and the signs of fresh momentum on the break above midline are required to shift focus higher. Basically, the gain of 129.89 is to confirm the bullish stance. Overall, the bulls are still well in play. Just current corrective action on overbought hourlies still sees the upside slightly intact unless we see break above 129.89, basically 129.83 seen so far. Break above here to open 130.00 is psychological barrier, and then we have the next barriers 130.20. They are the double top of 25th and 31st of October, and the 130.70 peak of 5th of October 2012 to open way towards 131, and probably to refocus 131.38 and 131.70 recent tops. A lot depends now on the today's verdict from the Eurozone finance ministers and IMF regarding Greece. Any positive release, of course, will be Euro supportive among with the positive technicals at this point. For our structure is still positive, although overextended conditions again could be a signal of some hesitation and probably the further consolidation ahead of fresh push higher. Most likely most of investors are going to reduce the speed awaiting the verdict from Greece, but overall positive sentiment still keeps the upside firmly in play, with the down 129 seen as a good support. This is the previous resistance psychological barrier, as well as it's basically reinforced by ascending a 20 days exponential moving average as shown on the 4-hour chart, and any stronger dips should be contained around this zone in order to keep the near-term bulls in play and intact for possible stretch through 130.00, our next target and psychological barrier. British pound, as said, surged the last Friday through 160.00 to post fresh high at 160.49, surpassing also the previous peak at 160.18 and 160.41. That also marks 61.8% Fibonacci retracement of the down leg from 161.74 to 158.26. Corrective action is now still underway with the more negative, I would say, at this point on seen on the hourly chart, as initial strength failed at 160.33, and now the pair is coming under pressure as our hourly studies are still pointing lower and lacking momentum for a fresh push towards 160.48 and probably possible extension up towards 161.00. Also, the overextended conditions on the 4-hour chart indicators already starting to point lower. See potential for some stronger corrective action of the latest strong rally of last Friday from 159.26 to 160.49, with the good support at 160.00. Psychological support also reinforced by 38.2% Fibonacci retracement of the upleg, seen as ideal reversal point in case of deeper dips. Any break below 160.00 would delay immediate bulls, but overall picture is still on the near term is still quite bullish, and basically only loss of levels around 159 could more significantly harm the current structure. As said, ideal reversal seen somewhere around 160.00. This also marks the broken main bear trend line drawn of 163.08, and break here to delay bulls. Otherwise, any deeper dips should ideally find a good support at 160.00. Also indicative is strength of the last Friday's rally, of course, on the rather thinner market due to the second day of holiday in the United States. That's basically one of the main reasons that sterling rallied so strongly, and basically some corrective action is required after such a strong and uninterrupted move. So we might see some stronger corrective action at this point. The dollar yen remains under pressure. Brief break below 82.00 is seen in the early hours of European session, with the bears on the hourly chart now taking full control. Reversal of 82.83 peak of last week, with renewed attempt higher failing at 82.61, now confirming the failure swing and most likely opening way for a stronger corrective action of the latest upleg from as 81.12 to 82.83. We will be looking for a test. Currently, the pair is currently testing 50% retracement at 82.00. Also, this is equivalent to the previous peak of 21st of November, with next support seen at 81.78, 61.8%. Negative tone dominates on the hourly chart, as all indicators are pointing lower and holding below their midlines, building up the negative sentiment, negative momentum, pardon, on the hourly chart. 4-hour indicators are descending, approaching their center lines with the, I set the initial target at 81.78, and then on the larger picture we have approximately 81.50, where is the previous peak at 81.58, reinforced by now sideways moving 55 days moving average at 81.53, and close to it is 38.2% retracement at 81.39. Ideally, reversal should occur around this zone in order to keep the latest bulls in play. Otherwise, break below these levels and more significant 81.00 would signal a deeper corrective action and keep the near-term bulls on hold in favor of a stronger correction of the strong rally from 77.12 mid-September low that so far peaked at 82.83. Overall bullish tone remains intact, but also indicative is quite extended conditions on the daily chart, with indicators starting to point lower. That is another signal, along with the clear break below 82.00 base, to signal some stronger corrective action of the latest strong rally from the latest uplifts from 79.06 to 82.83. From Ichimoku Studies 4-hour chart, cloud, the top is currently at approximately 81.20 zone, while daily Ichimokus are still very supportive. As said, overall picture is still firmly bullish, but going to the lower time frames, hourlies are already in the negative territory as the price broke below the cloud, and now the initial Tenkan-sen line is attempting below the Kijun-sen. That will confirm the near-term and bearish stance for the dollar yen. And the dollar Swiss, following last week's break below 93.00, our initial and psychological support, and extension down to 92.63, also surpassing the last barrier en route to 92.13 at 92.75. This is the low of 31st of October. Sees now bears in play for a possible full reversal of rally from 92.13 low of 17th of October that peaked at 95.11. Some corrective and consolidative action cannot be ruled out at this point, as hourly studies are already, our indicators are already pointing higher and building up the bullish momentum for a corrective bounce, as the pair reached so far 93.00 during the early morning hours, but failed to break. This is our initial resistance ahead of more significant, I would say at this point, 92.30 zone, where we have descending 55 days exponential moving average low of 22nd of November, and also 38.2% retracement of the down leg from 94.56 to 92.63. This ideally, any stronger bounce should be capped at around this zone in order to keep the immediate bull bears in play for a final push towards our initial target at 92.13 low of 17th of October 2012 to fully retrace the rally, as the pair lost ground following upside rejection at 95.11, and the gains were gained this pace and accelerated on a loss of important 94 support, where is also 200 days moving average, with last Friday's fresh descent now keeping a focus firmly at the downside, near-term focus at the downside at 92.13, with the 92.37 previous low seen preceding our initial target at 92.13. As said, ideally any bounce, stronger bounce through 93.00 should be contained at approximately 93.30-50 zone in order to keep the immediate bears in play for a test of 92.13. Otherwise, bears might be delayed for some a stronger corrective action. However, anything below 94.00 would be still seen as corrective and would not more seriously harm the near-term bears of dollar Swiss. And crude oil, as I mentioned, it's gaining some ground following the hopes of a possible solution for Greece that is keeping the positive sentiment in the most of the markets, and some political moments after in Palestine the ceasefire between Palestinians and the Israelis has been established. Now the new problem is in Egypt with some protests and clashes, keeping the tension that works positively for the oil price. Of course, the positive release of the positive news from today's Eurogroup meeting will be further supportive for the crude oil price. As said, the price is still within the range of 89.77 and 94.00. However, the upper boundaries now are coming in the near-term focus following the latest bounce seen last week that peaked so far at 88.50. As recall, we mentioned that break above 87.70 previous low and 88.00 is to bring some more positive tone in the price action. Still, we have 88.76, 50% retracement, and then recent peaks at 89.20 and 89.70, along with 61.8% retracement at 89.87. The retracement of the down leg from 193.47 to 84.05 required to improve the current structure and open way for possible further recovery. A good base has been built now in at 84.00, and the succession of higher lows and higher highs keeps the structure into the positive territory, with the near-term studies still weak, requiring some some stronger push higher in order to improve, while daily ones are again showing losing the initial momentum that was built up on the break above the diamond bottom pattern that signaled the fresh reversal, and basically this is the reversal pattern, with the good results seen initially at 89.77, but failure to sustain gains brought basically the oil price back into the recent range. As said, unless we see break above 90.00, 90.42, that is 38.2% retracement, not big prospect seen for the oil price in the near term, as bears are still quite well in control following the latest down move from 100.72 mid-September peak that bottomed at 84.05, and despite base being built at 84 zone, still a lack of momentum to clear our barriers at 90.00 and 90.50 might keep the pressure on the downside, and probably further range trading unless we see the break below levels at 86 and 85 that will reintroduce 84.00 base. And finally, gold that is in the positive mode. Last Friday's strong rally cleared all our barriers, 1738, 1746 and 1748, that marks 61.8% retracement, with the 1752 seen so far keeping the positive tone in play. Daily indicators now are above their midlines, that indicates possibly stronger gains, and probably move towards a yearly peak at 1795 after finding good support at 1672 on the 5th of November. 4-hour structure is positive as the most indicative for the near term. However, RSI now moving sideways in the overbought territory could signal further consolidative corrective action, with the good support on overnight lows at 1747 and more significant previous peak at 1738, basically expected to contain any stronger dips and to resume the gains towards fresh extension. We have 100% Fibonacci retracement at 1771, and that would be our next target after the consolidative action currently seen between 1752 and 17 47 is over. Of course, some more corrective action not ruled out, as hourly indicators are well extended and they all in overbought territory, basically starting to point lower at this point. This might trigger some stronger corrective action, with 1738, as I said, seen as a ideal reversal point in case of any deeper dips. This also marks the 38.2% retracement of the upleg from 1719 to 1752, and it's seen as the best good support to reverse and to resume the overall bullish structure. Ichimoku studies on the near term are positive. Dailies are just being capped, the gains being capped by daily Ichimoku top cloud top at approximately 17, currently at 1755. A break here as the price already holds above Tenkan Sen and Kijun Sen lines is seen required to resume the gains with interim barriers at 1771, our target Fibonacci expansion of 100%, and then 1774 en route to our next short-term target at 1795, 5th of October yearly peak. Only loss of 1738 could delay immediate bulls for a deeper reversal towards 1720 and our key support at 1700, of course, loss of which is again to reintroduce bears. For now, bulls are firmly in play and more focus seen towards the upside. That was all from me. I would like, if you have any questions, to raise them now. Do you want to say that there is a problem and you cannot hear me? Okay, we have a question for Euro Yen. As said, the Euro Yen hit its fresh high at 107.12. This was the overnight's peak on its strong rally from 94.12, breaking basically above the recent congestion top at 104.57 and retracing approximately, I would say, 76.4% of the larger down move from 111.42 down to 294.12. Overall, bulls are firmly in play with some overextended conditions seen on the lower time frame, suggesting that it's already underway, the corrective action. As said, we have the resistance supports, basically the upside barriers are seen at approximately 108, and then we have 108 is the previous peak of 15th of April 2012, and this is seen as a next upside target. Before this, of course, corrective action will be looking for test of dynamic support at 106 20 days moving average currently. and the 105.70 low of last Friday, ahead of 105.70, ahead of 105.50. That is 23.6% retracement of 100.31 to 107.12 uplift. Overall positive tone is still keeping the focus at the upside, but as said, quite extended conditions with RSI already pointing lower out of the overbought territory, and all indicators descending down on 4-hour chart, while the hourlies are already below their midlines, signaling some stronger corrective action. So far, the hourly 55 days exponential moving average contained the dips at 106.25. Of course, overall performance of euro is despite the positive technicals, sees now more focus towards the today's Euro group meeting. This is what we spoke at the beginning, and basically any positive release from them that is quite expected would be further supportive for euro and support the current positive technicals. Of course, the corrective action is likely to precede the fresh strength of the euro against the dollar, and in this case against Japanese yen. Any further question, please? Okay, if no questions, then we will conclude the session. As said, the key release is today's Eurogroup meeting, and we have to keep an eye on their release, most likely sometime in the afternoon that they will have their verdict. And in the meantime, we can expect some corrective action, as we said, quite overbought conditions on euro and sterling, and oversold on dollar Swiss and dollar yen could be a trigger for some corrective action, but overall direction still remains intact for all instruments, and now depends on the release of the Eurozone solution for Greece will be quite positive for the single currency. That was all for today, Monday 26th of November 2012. I wish you a nice day and very successful and profitable trading, and expect to see you again tomorrow morning at our regular time at 8 o'clock GMT. Good luck.